A voice bearing the weight of wisdom, experience, and a strong sense of hope for the future offers a message that has the power to completely change the course of your financial life. It's an appeal, an exhortation to do something, and a guarantee of something remarkable. In this compelling film, we examine the future of Tesla and electric cars while deciphering Cathie Wood's cryptic message. I don't believe the strike has anything to do with it specifically. It is entirely related to a shift in consumer preferences toward more affordable, higher quality electric automobiles. By simply passing cost reductions onto its customers, Tesla is driving that price fall. That's why I believe it will benefit Tesla. People complaining that they can't afford these cars is what we hear. As you can see from the UK news, Rishi Sunak is delaying the deadline for eliminating all internal combustion engines from 2030 to 2035. Regarding this change and how it will go, are we projecting the impossible? No, we don't believe that. Actually, 2 or 3 years ago, the total cost of ownership of an electric vehicle dropped below that of a gas-powered vehicle. Of course, things are a little different here in the United States. Sticker pricing coming soon. Is insurance included? It does come with insurance, yes. Indeed, as I mentioned before, there are regional variations, but in the US, insurance is one of them. Indeed, Tesla is willing to offer insurance because it is so confident that there would be fewer collisions and fatalities involving its vehicles. Thus, certainly, everything is included in it. We've always made long-term investments. What was a really smart approach was derailed by a sharp rise in interest rates. Come along as we unravel the complexities of Tesla's stock, the entire cost of owning an EV, and the future of finance. What specifically is she asking you to do with those shares of Tesla? As we delve deeper into the world of Tesla and the electric vehicle revolution, what secrets are lurking just around the corner? We will discuss tactics, obstacles, and the steadfast belief that is enthralling investors throughout the globe. We'll also reveal the mysterious appeal of Tesla's stock as we make our way through this financial maze, complete with a decline, big incentives, and a visionary's unshakable faith. Are you prepared to go on this thrilling adventure with us? The voyage ahead is fraught with opportunities and detours, but it also holds the possibility of insight and perhaps revelation. For the disclosure, are you prepared? Don't miss this fascinating voyage into the worlds of finance and innovation. Stay connected, subscribe, and stay involved. Let's get started, and welcome to Tesla Stock News. There are other electric car companies than Tesla that are being highlighted. It offers a more comprehensive view of the EV market. Tesla may be impacted by the current events in Detroit, particularly if there is a strike that results in possible shortages. Nevertheless, the wider picture indicates that changing consumer preferences in favor of reasonably priced electric vehicles are the main drivers of this transformation, rather than labor issues alone. Leading this shift is Tesla, which continuously lowers prices by transferring cost savings to its clients. Now some could counter that electric cars are still thought to be pricey. For example, the Chancellor of the Exchequer of the United Kingdom, Rishi Sunak, agreed to push back the deadline for phase-out of internal combustion engines from 2030 to 2035. Discussions over the viability of this change have been triggered by this decision. Some have questioned if consumers can actually afford to switch to electric vehicles. But let's think about an important point that's sometimes missed in this discussion: the overall cost of ownership. This viewpoint has already experienced a substantial shift in the United States. The adoption of electric vehicles has reached a tipping point whereby they are now both economically and environmentally beneficial for drivers. Even after accounting for insurance, the overall cost of ownership of an electric vehicle, EV, is now less than that of a conventional gas-powered car. This change reflects how the affordability of EVs is changing. The market leader in electric vehicles, Tesla, has increased this affordability factor even further. They include insurance as part of the ownership package because they are that confident in the dependability and safety of their vehicles. This special service not only makes life easier for Tesla owners, but it also makes selecting an EV more alluring. For individuals thinking about making the move to electric vehicles, it's a strong argument. Therefore, even while the UK's decision to prolong the phase-out of internal combustion engines raises legitimate concerns about the viability of the transition, it's important to acknowledge that the environment is changing. Electric vehicles are now not only a wise financial decision, but also an environmentally friendly one due to a shift in the total cost of ownership, especially in the US. In terms of technology and innovation, ARK Investment Group is adopting a distinctive strategy. In contrast to conventional diversified funds such as Capital Group, ARK is still finding its feet. Utilizing a first principles methodology and extensive study, it focuses on businesses that have the potential to completely change industries. Conventional funds could have a strong link with broad benchmarks, but ARK's approach does not. This divergence is evidence of ARK's dedication to diversity and its faith in businesses with the capacity to fundamentally alter the course of history. The most important question going forward is whether this less diversified strategy will be successful in the next 5 years. ARK thinks it can overcome obstacles like the recent increase in interest rates by making long-term investments in firms that are transforming their industry. Even in the face of extraordinary market conditions, ARK is confident in its objective to support businesses that are fostering disruptive innovation. The strategy's resiliency will be put to the test. Now, the market is paying great attention to what the Federal Reserve has done. Whether or not there is another rate hike in 2021 and 2022, underperformance was exacerbated by the expectation of higher rates. Thus, the issue is raised. In light of these depressing quarters, how will renowned investor Cathie Wood's approach change? What modifications does she make to her approach in light of the dynamic macroeconomic environment, particularly the obstacles brought forth by the pandemic? It's significant to highlight that, even in difficult circumstances, Cathie Wood maintains her steadfast conviction in innovation. In her opinion, it is precisely in these difficult settings that invention flourishes. Her portfolios are outperforming because they are gaining market share in an increasingly difficult environment. Prioritizing revenue growth and increasing profit margins is the way to recovery. Recently, wealthy retirees have demonstrated steadfast trust in Cathie Wood's methodology. These people, who are sometimes called old farts by others, have made significant investments in technology, innovation, and businesses such as Apple. They have profited from their investing choices because they have opted to disregard the chatter from financial TV or radio. Can the Cathie Wood method continue to be successful for the next 1, 3, or even 5 years, given the volatility seen in the last few years? Cathie feels that we are past the worst of the interest rate spike, which had a big effect on performance. The acquisition of Rise, a company that focuses on global megatrends in Europe and the UK, supports her claim that her strategy is now ready for the mainstream. Cathie points out that the seeds for the current market dynamics were sowed during the ed and telecom bubble of the early 2000s. As Tesla, even if it might be slowing down, it still has affordable growth potential. Tesla's stock is more appealing since it is currently more affordable than it was a year ago. Furthermore, a number of Tesla's business initiatives, including fully autonomous driving, insurance, and cost-cutting initiatives, are underestimated. Tesla is positioned to generate larger margins as it expands its business and works toward its 2020 Battery Day objectives, which makes it a desirable investment. Based on the projected development trajectory of Tesla over the next 10 years, strong revenue growth is anticipated, potentially exceeding management's aggressive 50% target. At the current stock price, this perspective offers investors an alluring opportunity. It's crucial to remember that Tesla only achieved a respectable 40% growth in deliveries in the most recent quarter, falling short of its internal goal of over 50% growth. We require more openness from Tesla, in-depth research, and future direction from the company in order to have a better understanding of its potential. Investo. Since Tesla now produces around 1.3 million vehicles a year, its sensitivity to changes in the economy is expanding along with its growth. Consumer demand can be impacted by even slight economic downturns. This necessitates annual targets and more exact instructions. Moreover, growth-oriented stocks such as Tesla are especially vulnerable to changes in valuation due to minor adjustments in growth rate projections. Investors are therefore eager to have faith that these growth estimates are accurate. Let's now explore the incentives that may be required to draw in U.S. customers. So the question is, will there need to be pricing adjustments? It's possible that Tesla will carry out small price reductions in order to guarantee that more of its cars, specifically the Model 3 and Model Y, would be eligible for the tax credit for inflation reduction. This tactic might be crucial for surviving a downturn in the economy. Stimulating robust demand growth is a crucial strategy for Tesla. How do they intend to accomplish this? They are, however, thinking about lowering the price of their platform in the upcoming year. The goal of these cuts is to create organic demand growth, which is an essential part of Tesla's expansion plan. In 2023, an astounding 1.6 million deliveries are anticipated. Let's face it, though. Although Tesla had previously said that they expected to grow at a rate of 50% over a number of years, the actual world frequently takes unexpected turns. Market dynamics, unforeseeable obstacles, and worldwide economic conditions all come into play. It's crucial to take into account the larger picture even though Tesla might not always deliver on its commitments. A minor error can cause big swings in stock prices in the quick-paced world of finance. Investors have to manage a difficult world. Now, in terms of Tesla, what ought to be our attention as observers? Two elements are crucial. First, watch Tesla's growth rate closely as 2023 approaches. With a projected 24% growth in deliveries for the upcoming year, a double-digit growth rate is still anticipated. Think about the profit metrics second. Tesla has demonstrated strong profit margins in the past, and more could be possible as production is being ramped up in locations like Austin and Berlin. Furthermore, and according to more current information, ARK Investment Management, led by Cathie Wood, reiterated its belief in Tesla. How? Under the direction of Cathie Wood, ARK Investment Management made a significant move in the first U.S. trading session of the year, demonstrating ARK Investment Management's resolute support for Tesla. They demonstrated their significant conviction in the long-term potential of the company by acquiring more than 176,000 shares of Tesla. This investment choice was made after Tesla's shares suffered a 12% decline due to a quarterly delivery shortfall. Even if the firm provides substantial incentives to increase sales, ARK's persistent acquisition of Tesla shares since October 3rd shows their belief in the pioneer of electric vehicles. This calculated action is in line with ARK's goals for innovation and technology in the future. Let's now examine the larger picture. Like many other companies, Tesla had its share of difficulties in the previous year. The stock worth of the corporation dropped by an astounding 65%. This reduction was caused by a number of variables, the main ones being inflation and growing interest rates. The market for electric automobiles, in which Tesla has led the way, has been significantly impacted by these macroeconomic considerations. It's clear from evaluating the scenario that Tesla's journey has been rocky, just like the stock market as a whole. Significant organizations such as ARK Investment Management's investment choices support the idea that, in spite of obstacles, Tesla's inventiveness and dedication to eco-friendly transportation solutions will always be a driving force in the sector. In the always changing landscape of finance and technology, the tale of Tesla's tenacity and the confidence of investors such as Cathie Wood's ARK Investment Management makes it an engaging read. There you have it. We've explored Tesla's world and its potential in the future. We've looked at Tesla's tactics and difficulties, as well as the resolute faith of powerful investors, such as Cathie Wood's ARK Investment Management. We have also looked at how affordable electric cars are, pointing out that the UK is continuing to phase out internal combustion engines, and that it is crucial to take the US market's total cost of ownership into account. Not only are electric vehicles, including those made by Tesla, an environmentally responsible alternative, but they are also becoming more and more affordable. What do you think will happen to Tesla and the electric car industry going forward? Do you think that the total cost of ownership will fundamentally alter how EVs are adopted? Please share your thoughts and